Good afternoon, everyone. I welcome you all back for the second session post the break. We have with us Aditya Pradhan, and he is here to enlighten us on the topic of changes in direct taxes and the ITRs. I would first like to welcome him with a memento and a bouquet, and I'd like to call Regional Council Member C. Pinky to present a bouquet and a memento to our speaker today. For the formal introduction of the speaker, I would like to call our corporate member, C. Mahavir Jain, for the introduction of the speaker.
Thank you, Purvi. And I welcome all of you in the second session. And I think most of are there. So it seems that that topic is also as relevant as the earlier topic. And I just introduced the speaker of this session, Mr. Aditya Pradhan, who is a chartered accountant and is the proprietor of J.D. Pradhan and Company. He has more than 7 years in the field of taxation practice. He, on behalf of his firm, has given many legal opinions to many companies, HNI companies with cross-border operation in matters relating to income tax and transfer pricing. He has wide experience in litigation and represented several clients before the tax authorities. He is frequently invited as a speaker in WIRC also, CP study circle over various topics ranging from income tax compliance as well as various litigations. So with this short introduction, I request all to welcome very young and experienced speaker of the day. Before he takes, I just want to welcome his sister, CA Tanvi Pradhan also, who is also there. So welcome her also. Thank you.
It's okay, no? Slideshow. Correct. It's there. Okay. ठीक है चलेगा. Okay. If I change it can stop sharing. Nice. Share. अभी आएगा.
Hello. Good afternoon, everybody. Before I start, I'd like to first thank JB Nagar Study Circle for providing me this opportunity to come here and talk. And I'd like to thank all the coordinators, conveners, deputy conveners, for coordinating this event. So before starting this session, I'd like to just give you a context about how we came to this topic. When Jayesh Bhai first called me and he asked me कि okay आपको recent changes का एक session लेने का है, but he told me that previously also there was a session on ITR and changes of ITR. So we started discussing कि okay now then what should we actually cover in the session. So all the changes which happened in ITR, that those were actually all discussed. So I didn't want to just duplicate them, so I removed them everything. Then 194 R, 148A. Also, I understand that there was again proper lectures focused on TDS, 148A, etc. So again, I have not covered those. So then what happened was so many things were getting out. So again, we discussed what should we do. I suggested them that we 31st July hai, so let's do something on ITR. Then he said कि नहीं ITR का already हो चुका है all the amendments. So what? So then we thought to come up with something new. What we have got, I have done or tried to do over here in issues in ITR is basically point out very basic issues. They are not something which will come in 148A, 147, but they are mainly issues that we may face at a time of filing the return. More like checkpoints for us, like, okay, we need to check this, we need to check that, at what point to time we need to check this, etc. So that is what I've tried to cover in issues in ITR. And then secondly, recent changes. There are some changes which are pending to be discussed. So I will be doing that. What I will do over here is that I have taken in my slide deck, I have covered recent changes first, but I like to take the issues in ITR first. They are more practical in nature. So maybe 45-50 minutes we can discuss the issues, and next 45-50 minutes we can go into the changes. So I'll just quickly go ahead. Okay. Issues in ITR. So these issues in ITR, what I have tried to do is, as I said, again, a checkpoint which you can share with your employees, your juniors. Maybe this is not what we look into normally. We normally look into the sections or the main provisions. However, these points are very important points for our juniors to know, because this is where a lot of mistakes can happen. I can share you many instances wherein the mistakes have happened in my case only. And from there, I have learned. So it's a bit different than normal, but we are just trying to cover as many points as possible for you. So first thing is, in an income tax return, the address of the assessee, what you disclose in an address, normally we never see what has been disclosed. It's very important because we need to refer rule 127 for that under section 282. It says that mainly nowadays for service of notices, email IDs are given. However, addresses sometimes they are still been. There are cases in my assessees are still being provided with physical notices. Of course, email notices are coming, but physical notices are still coming. But main point are not the notices over here, but in case of survey, as per Rule 127, official email ID, official address which is provided in the income tax return, that address would be considered for a survey of any notice. So it should not be a case that you have disclosed the residential address in the income tax return. So again, this is not what we normally check, but we should note all these points. At least our juniors should note this point. So it may happen, it has happened in one of our scenario that survey actually came into they went to the office, to the home of the assessee. And they said that, okay, we want to see the records now. There are no records at home. So it should not happen with us. Email ID and mobile number are very important into current scenarios. Mainly because all the notices and other things are served on our email IDs primarily. Now to check which email IDs we need to consider. There is a very common misconception over here. It says that email ID in the profile of the assessee, udhar jata hai. No. Under whatever there is in the email ID, maybe a CC is also marked to that. However, as per Rule 127, read with section 282, note, service of general notices. The email IDs which are considered are the email IDs which are given in the income tax returns relevant to the year of which for the notice has been issued, or the latest income tax return, or even the email ID which is there as per the MCA records. So what you are giving in the income tax return today is very relevant. Never give your email IDs. Normally it happens in senior citizens. We are like, nahi hai email ID, to apna de dete. And it has happened that with one of my colleagues that they were receiving some notices and they did not know only that such notices had come to them. So again, important never to give your email IDs. Secondly, in salaried employees, we have seen this. They give official email IDs @infosys.com. Try to make sure never to take those, because 2 saal baad wo chhod ke chala jayega, then no, we don't know where the email is. So try as much as possible to get this personal email IDs only. So which are permanently there with them and which they check. Okay, no refund. Refund. In case of refund, this is a very small point but has huge implications, and it is rectified also very easily. But in case it just causes some anxiety with the client that okay, refund nahi aaya hai, ye wagera. So this point becomes very important. We need to note that the bank, for the bank name which you are nominating for the refund should be the same which has been given, which should be same as per the PAN. Now, for example, in proprietors, this happens. It may be some Sun Consultants, and we just put in ki theek hai, abhi wo hai current address, then we'll just put that account. And then the refund does not come, and there is an error which says that okay, the PAN, the name as per the bank account and the PAN is not matching. So again, there is an error over here. So make sure that this is not there. Linking of PAN, it's okay, we can skip. Adjustment of refund. Very important point over here under section 245. Section itself specifically says that a notice should be provided to the assessee before any refund has been adjusted. Normally, nowadays in a digital era, all the notices are coming. However, there have been cases where the notices, we have not received the notices. So considering the appetite of the as your assessee and how much is the amount litigated, it might be a scenario where the demand which has been adjusted is a state demand by CIT or ITAT. Then that demands also are not liable to be adjusted. So if there is a huge refund this year and because of some demand in the previous year, then you can actually take advantage of this case laws, Hindustan Unilever case law, wherein they have specifically said that adjustment of refund cannot be done of state demands. Okay, 36158. This 36158 is comes in my next section as well about the changes, legal changes in income tax. 36158 is mainly regarding payment of provident fund, employee provident fund, and the same should be done before the due date. Before AY 21-22, there is a huge debate that what is the due date, whether the due date is as per the due date of income tax or the due date as per the relevant tax. After Finance Act 2021, this matter has been settled. Two explanations has been introduced in 36158, and the matter has been settled down by the law, saying that the due dates which are mentioned in those specific acts, only those due dates can be considered. So, but this section as per my is not a retrospective section. It is not a retrospective amendment. It is a prospective amendment. So in case you have any assessees which have such adjustment prior to IY 21-22, then you may go under This you can again claim the very basic case laws of Ghadke Patel illustrations, which we are claiming before. So you can go by those. Club memberships and all are okay. I will just skip that point, not important one. Next point is very important. Disclosure of assets. I think Kinjal was also discussing regarding this. Disclosure of assets for an Indian resident of Indian assets can be considered as a lapse from our end of non-disclosure. However, there is a case wherein an Indian assessee has not disclosed her foreign assets. And for disclosure of foreign assets, there is no limit of 50 lakhs or anything. For disclosing in assets and liability, there is at least a slab of 50 lakh of income. However, for foreign assets, there is no slab. So she had not disclosed this, and she had received a notice under the Black Money Act 2000, and a fine of almost 10 lakhs was levied on her. But she won the judgment under the tribunal. It said that the tribunal also held that it was a procedural lapse, and it was a lapse from her end. And for the asset, she had not disclosed the asset, was a mistake from her end. However, she had disclosed the income from that asset. So there was actually no intention from her or malintention from her of not disclosing the asset. She was disclosing the income. And sorry, there is no loss to revenue. Exactly. So that's why under the Black Money Act, 10 lakh rupees of penalty was removed. Now this is a bit out of this, not mainly relevant to us, but this is happening in many of my clients who are non-residents. They have citizenship or green card in US, or they have citizenship in UK. They have some inherited assets in India, and they are not disclosing those assets in US or UK. Now in India, it can be that lapse can be condoned by saying that it's a lapse. However, in UK and the US, they have very strict laws. Because when you try to sell these assets and take the money over there, then the IRS comes to UK saying that you have not disclosed the assets. So not mainly relevant for us, but if you have some clients like that, we can at least educate them that this is happening. Okay. Okay. Now for assets and liabilities, there was a notification which said that you need to disclose the cost. Now, under such situations, we don't know what the cost is. If we go to section 48 or section 49, which says that you go to the cost of the previous owner. Maybe in one of my client who has a inherited asset, we are going by that rule. We are just taking the cost of the previous owner, that is their parents. No, and for NRIs who are non-residents and residents who are not ordinary residents, for them foreign asset disclosure is not required. Foreign assets. For residents also, for income which is less than 50 lakhs, it's not required. No. This is a very peculiar case, and this has happened to me once. That's why I'm showing a very small disclosure, but it can have a huge implications. Societies. I'm 100% sure in many of our situations, ATP 2D reduction must be disallowed. In AY 1819, when our return was filed for one of our cooperative housing society, everything was done properly. We showed a proper deduction, income was shown properly. What happened was that when my junior there is a clause under other schedule which says that whether audit is applicable, tick yes, and then you have to actually disclose under what act the audit is there, under what section the audit is there. And then I think so there is date of audit report has also to be mentioned. 2-3 disclosure requirements are there. Only those things were not disclosed over there. What happened because of that was under processing of 143(1), the CPC, they processed the return as if there is no audit to be performed. Yes. Delay in the due date of the return got processed from 31st of October to 31st of July. We had filed the return properly on 1st of October. But then just because of this disclosure, and of course, you know, the under section 80A5, there is a disallowance of ATP2D in case there is a, in case you have not filed a return in time. We just disallowed it. Yes, they are. Actually, in AY 2021, we have 12 cooperative housing societies. Out of that, 8 were disallowed. And of course, I had checked this point also, audit everywhere it is mentioned. One, we are trying for 154, all the 154s are getting rejected. And we just have to go to CIT appeals. But there is a good news now that in CIT appeals, they have started passing favorable orders. For this case, which I was discussing with you for AY 1819, we just got the order 2 months back. And the main appeal was regarding what is the due date of filing the return. It was like a very stupid appeal. The audit has done, we know audit has been done. Cooperative societies need audit, but still we had gone under that one. And we got a favorable order. But ATP2D is like the means income tax low hanging fruit. They just disallow it for no reason.
Because ATP2D, there are huge amounts of societies on which they have got their act.
Okay.
That is the thing. That is not being taxed. That is not being taxed. That is the so in several of my cases also it has been disallowed.
Okay.
So demand is coming. And at CPC level, nothing is happening.
Nothing happens.
So
154.
is of no use.
Yes.
So we have to go in appeal only.
Yeah.
First, all the due date and all allowed or not audit correctly.
Yes, everything.
Still, we are getting notices. So we have just to ignore, and there is no point in asking in Bombay. What is CPC being allowed?
Yeah.
You have to go in appeal.
Yeah. Only in appeal they are giving the. No, there was a problem, and I think Kinjal would also be knowing this. What was happening from November 21 because of the shifting in the faceless scheme. Almost no order was passed from November 21, almost till like 3 weeks back, 3-4 weeks back. After November 21, the order just started. Means they were not coming up to the extent that some of the ITATs we had filed in February. They have their hearing now in next 2-3 months. Such was the shift. This ITAT, the hearing started coming up in 2 months, 3 months time. Okay, presentation in financial statements. Again, an important point for some of the cases. Over here, what had happened was freight and forwarding expenses. Many times your clients must be also getting freight and forwarding expenses as reimbursement from your client for reimbursements. Now, this client decided that, okay, now this freight and forwarding should be just netted off against income, expense and not so separately. But the vendor had deducted TDS on freight and forwarding only. We claimed the TDS under 139. We claimed the TDS, and then a 139.9 notice came up that you have shown the income, but you have claimed the TDS but not shown the income. So 139.9 notices are coming up now. So even presentation of financial statements should be looked into correctly. Builders. Now this is again an issue. As Kinjal said, as a discussion point we can discuss. I don't know if there is any solution, then please let me know also. This is a very peculiar situation wherein the builders are recognizing the income as per AS7, exactly. And then the TDS which the buyer is actually giving, there is a mismatch of income and TDS, which is actually recognized and the income as per the TDS. If there is a scenario wherein we are deferring the income to the next year, okay, we don't claim the TDS also, we defer the income to the next year. Those cases have been accepted. However, there have been cases wherein the income is of next year and the TDS, sorry, the income is claimed in this year. TDS comes in next year. So in this scenario, what happens next year? We are claiming the in TDS. At that point of time, we are getting 139.9. And then we have to go into a reply to the notice saying that okay, the income was already claimed in the previous year and it does not form a part of this year. Then. So and this is happening not only with builders, this is happening with many government contracts also. Clients having government contracts. Yes, they do it on cash basis, exactly. Yes. Yes. For us also it happens, but for our case it's okay. Yes. 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 Yes, because in after 1 year the has been passed. So for one of the situations we had filed at 154 and over there it got accepted. 154 and 143.1. 154, yes. The TDS is not considered. It came to the assessing office. Physically. That's why it got accepted. CPC will never do that. Yes, that is true. It's you can get it transferred from the CPC. You have to put like 7 grievances for that. After 7th or 8th grievance, it gets transferred. Whenever you go to an assessing officer with respect to a which the thing is pending with the CPC, they just say हमारे पास jurisdiction नहीं है sir. Okay.
Advance was received, it was not my income. So I did not claim it, and I did not put it carry for also. But
it has happened.
To claim also.
Yes, sir. It has happened with.
How is going to get rectification done?
No. What we tried to tell them over there was we told the assessing officer was same argument as you're saying right now, that as the Income Tax Act does not mandate us to show it in the previous year. We just showed them that in 26 years last year, there it is there. And then we have not claimed, we showed them the last year computation. So it has to be carried forward only. But what had happened in that case also was that we had filed a return at one day. Let's say we had filed somewhere around in October, and that client had revised his TDS return next year in January something and put up the provision. Maybe when his audit was done, he got to know this TDS was not there and then he uploaded. So this is what happens. And then we don't keep checking every client's 26 days every month. Yes. That's what we showed them.
After filing my return.
Gets expired. This was this. Yes, it happens, sir. It happens, but we got it rectified from the assessing officer. CPC we tried to do it once or twice. It did not just. Yeah. Nowadays, it's actually coming in 2 seconds. Yes. We showed him the 26 days, he accepted. Now it was maybe the assess is good officer. Yeah. Yes. Now comparison for AIS and ITR. last year they said that when the AIs was launched somewhere around in November, they said that this AIs is just recommendatory in nature, and the associates just can rely on it, but it should not be relied upon and disclosed. You can just check it whether it's right or wrong. They had even said that no notices would come based on this, etc. But however, again in March, it was not actually notices per se, but we were getting emails of mismatch. So now what we are and this AIS mismatch is mainly coming in property transactions, joint holder cases. The name is the cell is again of both husband and wife. Again, it's an argumentative point now after Kinjal's session, whether it should be just shown in the husband's name or it's taken 50-50. But what's happening is that practically banks are not accepting. If the agreement is having two names, two holders, then in one of our scenario, we were asking the bank to just do the TDS under one name. Because the payment was going from just husband's account. So we were telling you just do the TDS on his name, because we want to show the entire purchase under his account only. And he had a capital gain, but just for convenience purposes, we wanted to show the wife's name as the second holder. And this thing actually come to us after this have been done. So after the year end, when it came to yeah, correct. It came that time only. So I had asked the bank to like just put it in there, but the bank was so adamant that it's like no, दोनों का नाम है, मैं दोनों के नाम पे TDS है. नहीं पूरा नहीं, half. In our case,
I have sold the property and both bills were there. They issued TDS in both bills. Now, and
yes, it's a debatable point again. So as a matter of, in spite of the fact that there have been judgments against that, just so that there is no notices on clients, we are showing income in both their hands now. Because last year we had done that. Last year ka hi baat hai ye, ki under both names the TDS was coming. I knew that as per the case laws and everything, it should have been just the sale of the husband. But then if I had just shown it in the name of the husband, then 100% the wife would have got a notice. But now that's why we took a risk. In spite of knowing the correct legal provisions, we just for the administrative purposes which filed it. Now what both of their 143 ones have come in, and both of them are correct. It's favorable, means no adjustments have been done.
I have also done the same. Taxation. So I claimed the loss in husband's case and filed the claim.
It's happening, sir. So we know the situation, what is the correct situation. But then the assessing officers are not going by the legality or the legal ownership per se, but they are just going by some procedural sections such as TDS, compliance sections. Actually, the compliance section should not determine who is the legal owner of it. But then still, it depends upon the assessee to assessee. Some of the assessees are nahi, barabar hi karo. But there might be some problem again. Then there would be a lot of litigation in the wife's account. Because then the income tax officers would say that it is the income should be under both their hands. Yes. Yes. So not only legal error. In my situation, same tenancy. There was we had given a POA, a power of attorney of some other person. Uske to IAS mein aa raha hai. No. Yes, correct. So I was going to get to that. So what to this year, what we are doing for all the AIs, we know that they are going to send some email or something, not notices per se, but they are going to send emails to us that there are many transactions, and those transactions, some transactions are compulsory, we need to reply them. Some transactions are like optional. So right now only we are giving the feedback to them, saying that it doesn't belong to me. I was just the power of attorney. But AI is just beyond my comprehension, because power of attorney is getting. I'll give you a very simple example. One of my clients changed his broker. Changed his broker from, I think, Motilal to NJ or something like that. It happened. In AIS, all the shares which were transferred from this broker to other, those sale is also reflected as an off-market transaction. Means like we just don't understand, and not that it's showing properly. This is a long-term asset. A cost is this. They are actually giving us the cost of acquisition, and everything is there. Yes. Yes. So correct. So now, right now only we are putting this. So if there is any such peculiar situation in your case, then just put the response right now only. Yes, ma'am. Right now, yes. Anyway, you're going to get an email, because last year they said nothing is going to happen on AIs. Now this year it's 26 AIs. Some other interest is showing. AIs is showing some other interest. TIs is showing something else. All three. 26 AIs. Go by 26 AIs. Yeah. Correct. Yeah, means for many of our clients, we do take from AIs, but then we of course confirm it from the client कि बराबर है कि नहीं वो check करो, because dividend वगैरह भी and it's happening that 796 and there are two entries of active and inactive. It's like if they are squaring it off, at least they square it up to zero. Yes. Yes. Completely different figures. It will take a whole another.
In case of discrepancies in all these things, AIs, TIs and all that, I have been asking certificate of interest accrued from the bank. It's a different, that is a finding.
That is also different. Yes. And in case of cooperative banks, that's a different number itself. So 26 says 99% cooperative banks some file some different amount.
Because sometimes they are not giving information also. That also.
Sorry?
They are not giving information to income tax also. Sometimes.
Yeah, cooperative banks 99%. If you take their interest certificate, it will be different than 26 days. Yes. But it has been happening with some of my clients. Means, one of my case, I called up the client and told him, "Arey Goa Urban Cooperative Bank में है." He like, "अरे आपको कैसे पता चल रहा है?" It's happening once. I am getting to know all these things also because of this. I will just go quickly now. Okay. 115 BAA, this matter has been resolved. Procedural labs, form I, C, I, B, etc. were not filed. So, but nowadays, now this has been solved. Condonation of delay has been provided. Circular 6. Why I have kept this point is because in case now for companies especially going forward next year, you're claiming this. Then if form 10I, form 10IC or 10IB or those forms have not been filed, in case of companies, what they are doing, instead of taking 22% or 15% as we are trying to claim it to them, they don't go to 25%. They directly go to 30%. Because it's a technical error in the form. If we select 115 BA, then in the next line only they are asking that whether the turnover in this financial year was less than 400 crores or not. That blank only just goes away. So we can't take over there. So I think so if the form has not been filed, they just ignore this and then they go ahead. So it has happened with us in a situation of 115 BA. this condonation was given for 115 BAA for 22%. However, in a scenario wherein the client is claiming exemption under 115 BA, the tax rate again over there is 25%. So we have gone to CIT appeals now and asking them if you are not giving 25%, at least give us the rate of 25%. The taxability will be the same, but since it's a procedural right, but without prejudice. 43B and 40A7, these provisions are basically where there is a payment disallowance in 1 year. We take the disallowance in another year. Now what happens is that had happened with one of my colleagues, their juniors thought netting of the amount is a good thing to do. And then again, the mismatch of tax audit and everything got disallowed. It got solved by a rectification, but still you need to note. Select the correct employer, very important. There is an amendment also for pensioners. We need to see the central government, state government, different categories have been provided for them. So make sure that the correct employer has been selected, because it is very important in the cases where you are getting commuted pension and you are from a central government, or in case you are getting leave encashment from central government. So this may happen. A Tata Memorial employee got a disallowance. Yes, sir.
One employee who was the government employee
Hmm.
and he received State Bank of India. And what should be the name
That's
of the
uncommuted
employee?
pension, sir. Uncommuted pension is taxable.
No, question is not about. Question is about who is the employer of India or the government of India. Sir, and the employee question. The government of India. Why you are writing State Bank of India?
It's happening because in one of my case also they were
What
getting
is the answer?
clarification has not been given, so I can't also judge it. So I have been. So again, what I do in this scenario is I'm consulting with the client, because what may happen is that if you put the original employer's name and their TAN, then maybe your TDS might get disallowed. Might be having there from their previous Form 16, right? Then see, anyways, if you disclose that, then you will be disallowed.
From the TDS.
Sorry.
Government of India is exempted. Where you think the TDS number?
No. TDS is, I think so, means you don't have to deduct TDS of central bank government, but central government has to deduct our TDS, right?
It is the same case and the has got the TDS number.
Yes, you will be disallowed. So that's why I'm again ignoring the legality of it and just going for the administrative convenience. Because for a case of like where you're getting 60, maybe 1 lakh or 1.5 lakh of pension per month, there is a TDS. And then the client always says, just don't look at the legality point of view. Maybe you may go and litigate and you may win ahead, but who will go there? Because many of the assessees don't have that appetite of going ahead. So, and it doesn't make sense also. So this is my view, sir. Sir, बोलिए.
Who is the pensioner?
Yes. Okay. Okay. I think so 143.1 and 143.3 we are discussing along. 139.9 defective returns. In the income tax side only they have given an FAQ what are the common errors which can be expected by the income from the assessee. From they have themselves mentioned some of the errors now. So the main prominent were the first three of TDS credit being claimed and correspondent receipt or income not omitted for to be offered in taxation. I think so it is applicable in your case, sir. Yes. So in case it happens, then it may happen that there is a debate on whether a TDS should be deducted on a certain income or not. And the vendor may just deduct the TDS on a safety basis. कि चल मैं तो कर दी.
Like reimbursement of expenses.
Reimbursement of expenses. 194 IC corpus, which the builders give. So now the builder will do the TDS. But if you are taking a stand that the TDS should come to me, then you will be claiming the TDS, but you're not going to offer the income. Yes, sir.
One of my clients, he sold his property. Possession also payment received, but party has not deducted TDS that time. Next year, party has taken the loan from bank, and bank has paid TDS in the current year 22. No problem. 21 little high, and he has invested also to function the capital. No TDS is reflecting 26 years. If you want claim, the ITR will say either show that there is no income open.
As the situation we discussed now, income is means the TDS goes in the next year, and the income has already been
Income
shown before in the previous year.
How we can claim TDS? Because unless there is a capital in income, TDS not allowed. Here come itself in that. ऐसा देखो ठीक है 139 होती सारे उसकी बात है
Very true.
देना पड़ेगा माइक ले लो
True.
ऐसा देना भी पड़ेगा
Okay.
actually society is not
Sorry, sir. Can you just repeat? I could not get it. To Dhoni. Okay. Okay. Again, a very different situation. Just by
you can put PAN number of that person that those TDS deducted you can claim his return liability.
okay, there is a solution.
Also, the person deducted TDS, he has to file his return accordingly. Then
You are not going to show the income and the TDS as well. So there is no question of income also. Yes. But again, under 139.9, then the disclosures need to be properly done, the PAN card, because under 139.9, again, the gross receipt shown the last point of 26 A's and the total income, it does not match, it may go under 139.9. But if our proper disclosures are given that the income has been disclosed by someone else and he actually discloses it, then maybe. This one? Correct, correct. These issues are given by the income tax in their FAQs only. Now, from the legality point of view. 139.9 is a very wide term, actually. It just says about, if can you just give me the act?
1 minute. Okay. Okay, I think so, sir. We'll take this separately. Sorry.
Some of the participants are sending notes की presentation में
Okay,
पूरा
okay,
होगा।
okay. ठीक है. We'll take this afterwards. Okay, some of the issues I have mentioned, some of the issues regarding 143.1. But I think so it's mainly regarding ITR, so I'll just skip these points currently, and I'll go back to my slide deck, and I'll start with the changes now. You'll be having my presentation with you. So some of the issues which are mainly pertinent to 143.1 and not relating really to ITR, some of those issues, pertinent issues also I had mentioned, but since they are going a bit out of scope of our topic, so I'm just keeping those because we can have some discussion in these points. What are the recent changes? As I said, many of the, or not all the recent changes have been covered. I just checked that there should not be any duplication. So that's why some of them I will remove them. Okay. This was a very welcome amendment by for COVID-related illness, medical treatment, and ex-gratia payments. As per this, I think so this is already covered, but there are some of the issues which I wanted to discuss. You all know that if the medical expenses have been reimbursed by the employer or by any other person, to the extent that my expenses have been incurred, no tax has to be paid. If any ex gratia payment has been received from the employer, no limit has been prescribed, but from if it is received from any other person, then 10 lakh rupees is the limit. Right? It's after the death of the employee. And they have said that it can be received by the assessee or the family of the assessee. And the family of the assessee, they have specifically defined it separately to be the spouse. And again, they have defined it as it's the spouse and the brother, sister, father, mother, who are dependent and wholly dependent on it. Now, again, it can be a legally, the point can be raised. Now, for example, the brother is earning, let's say, 60,000 rupees per month, 70,000 rupees per month. And still the assessee is claiming he is dependent on me. Then it's again a legality, it's a debatable point. On a just on the face of it or substance over the fact, I would feel it should not be the case. He should be having zero income, and then only he can claim this section as a dependent. Yes. Good. Now, if for example you have received this, now whether we should show this as an exempt income or not, my opinion is different. I would say it should not be, because it's very similar to something like gift or an inheritance if you have received. Because section 17(2) also very specifically says that it does not form part of perquisites, and section 56(2)(10) also says that. So if it's not an income of the person, it does not go into the exemption criteria of section 10. So I don't think so. We need to even disclose this income in our ITR. Inheritance is never disclosed.
The problem is that if you inherit some property or you get some shares, those shares subsequently as a pension comes, how do you get the shares?
Dividend income maybe after your inheritance, it will be coming into your hand. Yeah.
You're not holding the shares, you're not showing dividend.
Correct.
Now you suddenly start showing dividend income in lakhs.
Yes.
Because you inherited shares of crores of rupees.
Yes.
So if you don't show that in your return, I inherited the shares, they have no clue that how I received it.
Yes, then if there is a notice in that regards, if you receive.
What is wrong in showing it? What I'm saying is if you are showing that as an exempt amount which you have shown,
It is not tax, sir, but under what section will you show it as an exempt income? Because there are two different things. Others. No, they give some sections, but when you can of course say others. Again, it's a very safe view taken by many, but on a very legal point of view, it should not be shown. I have never shown. But then what would be the cost of the shares? Again, that would be the question.
What about buyback? You discuss.
Yeah, we'll discuss it separately.
Sir, what about buyback of shares?
What I will do now, I will try to complete the presentation in next hour. Maybe you can just note down the queries and we can discuss it later. Okay, yeah. So in this being a welcome provision, everything, but they have maintained a condition saying that subject to prescribed conditions. Now these conditions have not been prescribed, and what conditions they are going to give, you also don't know. Whether they are going to say that you need any forms to fill up, or you need anything like maybe you need to at least keep some medical bills or anything like that. So in case if any of your assessees are having this exempt income, this income, then at least advise your assessees that in case in future, they might say, okay, just at least produce the medical bills, produce the papers from your employer. Why was this received? So at that point of time, again, we need to keep these papers. There is another point over here which says that illness which is related to COVID. Now, there can be an argument over here again saying that just COVID illness में हमको सिर्फ बुखार आता है, बहुत सारा आता है, मगर after COVID there have been instances for many that after COVID there has been a kidney failure, there has been people are getting heart attacks. So this might go again into debate that this heart attack, and doctors are also telling us it's mainly because of the COVID it's happening to you. So if it is because of the COVID infection, then it might again go into litigation saying that these expenses are relating to the illness from COVID. So it is a debatable point. Another thing what they should have done is that it's happening in many cases that, for example, a employee at a very high post unfortunately passed away because of COVID. Then what they are doing, the employer is doing, is that they are giving them the salary till their retirement. Now, for the first year, this will be considered an ex gratia payment. From the next years, again that would be taxed in their hands. So maybe for employers, a representation can be done by them. At least from the employers, if this payment has been received, then at least they should not tax it. A solution to this was given by one of my colleagues. I don't know practically it should be done or not, but I'm just discussing with you. He said that what we can do as a way around it, one of his clients has already done this. They have issued him NCDs in the first year itself, and they are going to every year they are going to repay him some amount from that NCDs. So in the current year there is no income, and the money has been given to him by way of NCDs, non-convertible debentures, and every year they are going to redeem some NCDs for it, some partial amounts of NCDs. So maybe that solution can be used by your assessees also. Section 80EEA, interest on loan from purchase of residential property. This section was extended till 31st of March 2022 in the previous year. This section was actually advertised as a section which is beneficial for the first time buyers. It's actually not like that.
It's not the first time buyers. It's for a person who doesn't own any residential property at the time when he takes the loan. May happen that he might be having some other property and he sold it. And now he's buying some another property. At the time, he doesn't own anything. Again, there might be litigation in this case that whether ownership, joint ownership is again an ownership over here, the 54F debate. Okay, going to the next point, section 1010D. 1010D was a exemption which was given for life insurance policies which were linked with saving schemes. What used to happen? What used to happen is that many rich people don't want to pay tax, used to take huge amounts of ULIPs. And then when they used to mature with market returns also, they used to get some good amount of returns, 10-12%, but no tax used to be paid on that. So in order to curb those and just to keep it for the people to whom they are intended, they have kept it, they have said that only till 2,50,000 rupees, the premium is payable for one policy in 1 year. If it is less than 2 lakh rupees, 2,50,000 rupees in a year, only then the exemption will be allowed. Now, there might be a scenario who may think, okay, I'll buy 10 2,50,000 policies. No. Then again, they have kept in a point that saying that the aggregate of the premiums paid for every year should not be more than 2,50,000. In this scenario, it may happen practically. We're discussing it. For example, an assessee has 3 premium policies. One is of 1 lakh. Another one is of 1,25,000, and one is of, well, let's say 1 lakh rupees. So out of these 3, as per my opinion, they should take 2 of them as 2.25 as the exempt policy, and the remaining 1 lakh should be taxed. I don't think so. The section means to say that, okay, just take a proportion of the another insurance policy. Again, it might be debated, but as per my, and I will take a conservative opinion position on this for my client. I'll take them that if there are separate policies, then only those policies which are less than 2.5 lakhs will take the exemption. It is not applicable when the sum received is on the death of the insurer. Now, in the situation where it is not exempt, then it will be there have been consequential amendments in capital gains. Be taxed as per capital gains. It will be deemed to be a capital asset, and you will be taxed on the capital gains. Interest of provident fund, of important amendment. 80 IAC changes for companies now. 80 IAC is a beneficial provision for startup companies, wherein the form of the first 10 years, any 3 years of the first 10 years, 3 years deduction of complete profitability is provided to you. This now for which companies do we get this 80 IAC? This is provided for any companies in which the period of incorporation was from 1st April 2016 to 31st of March 2022. It was still 21. Last year it got extended to 22. This year it got extended to 23. 80 IBA, Affordable Housing Scheme. It got extended till 31st of March 2022 as per last year's budget. They came up with an amendment saying that new affordable rental housing scheme will be launched, which would be approved by the central government. I did some research on the PM site on this also, but as of now, currently still there are no rental housing scheme on the PM site as well. So I don't know how much it will be applicable. Okay. This is a very important amendment, section 40A2, says. Just to give a background, says till now was always considered
to be a tax and never taken as an expenditure. But somewhere in 2018, a Rajasthan High Court case came up wherein it allowed cess as an expenditure. And then it was again followed up by Sissagoa High Court decision, Bombay High Court decision. And from that it started. If you just see the forward referencing of Sissagoa, almost 100 or 120 judgments of ITAT have come up just on referring on this judgment of Sissagoa. So this section, they came up with an amendment saying that it was always construed under section 48I, 48.2 that says is never to be considered as an expenditure. And till here it was okay. But now they are saying that section 155 is also amended. It says that in case in your situation, in case in your client, if you have considered this application, if you have considered this, then you have to make an application with an assessing officer, disclose this income and pay tax on it. If the application, and then again they go ahead and they say if this application has not been made by you and it comes to the notice of the assessing officer later on, then it will be deemed to be an underreporting under section 270A and 50% penalty would be levied. So this in my opinion is a bit unfair, because at that point of time we did not know that such amendment was going to come. We cannot be like a Jyotishi saying that okay aage jaake kuch hoega and then tell our clients ki nahi aa bhi sakte. We don't know. There are high court judgments, there are many ITAT judgments, and then now it's deemed to be a penalty as well. So there can be a lot of litigation on this. I've just put down a few case laws which can support our claims in this regard. Whether 155 section is constitutionally valid can be a whole legal battle in itself, because it's kind of an not even a retrospective amendment. Now whether it can be considered as a retrospective amendment or not is also a challenge, because it's not the section has been worded not in the way that it has been amended in the way. The section has provided a clarification and an explanation saying that it always meant to be this. So then whether we can cover it under the retrospective amendments, there are some case laws such as I have covered it ahead. In case of interest under section 234B, it says that in case of a retrospective amendment, the 234B interest should not be paid or should not be levied. But then the government can take a position that this was never meant to be a retrospective amendment. It was just an explanation added from AY 56. Then we have some case laws. Penalty. Now penalty is very harsh term actually from my knowledge, and there are decisions in income tax also under Hindustan electrographites, which says that subsequent amendment of law, you cannot levy additional tax. Additional tax was a kind of penalty. It's a very old case law. So additional tax was a kind of penalty then. So they have said that if it is if it's a retrospective amendment, then it should not, the penalty should not be levied. We have two case laws for that. Section 155, if we read section 155, it has just mentioned penalty under section 270A, and it's silent for penalty under section 271 1C for the years from AY 56 to AY 1670. So, and someone can argue that as per the wordings of section 155, it says that you had claimed that cess and application has been made and a penalty under section 270 would be levied to you if it is not mentioned. So there is an condition there is means all the conditions should be satisfied. Someone can make an argument saying that it has only mentioned 270A. 270A started from AY 1780. So whether this provision is not applicable only from AY before AY 1670, this is a legal argument which can be taken to high courts or maybe to Supreme Courts. I don't think so officers are going to accept this position of us. Okay. If there are cases where the adjustments are already done and it's pending in appeal, then maybe the best thing would be to just take back the appeal. If it's an additional point, then take back that additional point. We talked about the applicability of section 234B. If again, if we refer to the Supreme Court judgment in the case of Engineering Analysis Center of Excellence, it had come in the time of royalty for software services when the amendment of section 9, retrospective amendment, had come. He said that it is impossible for any assessee to know that there would be a retrospective amendment. So you cannot levy a interest for that.
What is impossible?
Theory of impossibility, yes. It is impossible for us, yes. But then again, the assessing officer or the department may argue over here that it's not an amendment itself. It's a clarification. Section 37, allowance of expenditure in prohibited by law. I'm quite sure that in section, while you're discussing on section 194R, you must have gone through this. I'll just tell you. Pharma companies give a lot of freebies to the doctors, saying that okay, maybe forward our medicines, etc., etc. As per the Indian National Medicine Council, a doctor is not supposed to take any freebies from the pharma companies. Now, this provision is for the doctors. So what the pharma companies argued was that this provision is applicable for the doctors. They are taking it. Nowhere it has been said that pharma companies can't give it. So it should be legal for us. Further, they have said that okay, 1 minute. Yeah. So this was a position till now, and there are a team number of judgments where have come in that the claims have actually been allowed in the case of pharma companies, and no consequential cases have been done by the Medical National Council. However, this provision might have been for that specific expense of freebies given by the pharma companies to the doctors, but it has a lot of other potential damages also. For example, it says that any offense prohibited in law in force in India or outside India. There have been provisions before also, case laws before also, and this was actually not warranted for. For example, is the department saying that all the laws existing outside India are to be enforced in India as well? There might be laws outside of India which are acts as per those laws which are illegal in those countries, but which are legal or very normal in India. Middle East countries, they have many laws, Sharia law is there. Over here, it may be very, it might be just a common thing to do. Now, as per this section, if any of the outside laws outside of India have been breached, then also it will be considered for disallowance under section 37. So that I feel is very unfair. Even in the case of, in this Mylan Laboratories, what had happened was, it was a very simple case. It was a commercial law of patents which was breached, and the fine was paid to European Commission by them. And Mylan Laboratories that then had won, saying that This fine was paid by us so that there is no protracted litigation. We had just paid it to end the litigation. And further, why are you applying the outside laws to India? So now this section changes it all. It actually is expanding the scope, and there might be a lot of litigation ahead. Apex Laboratories, many of those must be knowing about this. Apex Laboratories was a Supreme Court judgment which said that the freebies given by the pharma companies cannot claim that, okay, if the law for the doctor is that they should be punished, then it doesn't mean it. They have actually referred to the IPC for bribing. It's like if the bribe is taken is an offense, then giving the bribe is also an offense. So that's what they have taken in Apex Laboratories. They have said that freebies cannot be allowed. Okay. Now, in this case, third point. Again, this might have a lot of implications to compound an offense under any law. Now, offense is a very harsh term. Offense is, as per the General Clauses Act, Section 3, it says an act or omission made punishable by the law in force. So, for example, now since this section has come in, what may happen is, if any of your clients are paying any compounding fees, or they are paying any out-of-court settlement, or any fees are being paid to end the matter, even that may be considered as a compounding or a compounding fees. There have been several decisions in the past which says that there was a decision, I was just researching it about transport companies. The transport companies trucks, they are carrying a lot of overweight transport company. Okay, they made they are carrying in more than 230 instances, they are carrying overweight vehicles. It's a very normal to their business. And now they are just paying the fine and regularizing. Even in the case of builders, the Madras High Court, cement distributors. This is a income tax act. It is under the Income Tax Act. It says that offense should be an offense and a penalty should be bifurcated. An offense cannot be a penalty. Offense is something which is dealt by criminal courts, while penalty is something which can be allowed, but it is something like it can be a permitted violation vis-a-vis a non-permitted violation. For a penalty, you pay some penal charges and go away with it. But offenses are morely kind of in criminal cases, and this is a income tax judgment is only. But does that mean that the penalty is also to be allowed? No. Then we have a judgment of Haji Aziz also, which says that penalty should not be allowed. But then this Supreme Court judgment had come up way back in 1961. Supreme Court judgment in the case of Prakash Cottons had said that it was a GST, it was a service tax case then. This had said that the penalties can be allowed if they are compensatory in nature. And this has been used in many of our cases till today. So again, why I'm quoting all these points over here is that in case any of your client has paid any compounding fees or paid any fees just to get out of the matter, to settle the matter, there might be a scenario it is classified as an offense. Then you would have to represent the assessing officer, never going to listen to you. So there might be a case, not even in ITAT, but in High Court. You go to High Court and then they give you relief saying that it's actually not an offense, but a penalty, maybe a permitted violation. But of course, there are no case laws. As of now, you have to use the old case laws only for that. Late fees for filing TDS returns, it's mainly of an compensatory in nature. Interest and late fees we are considering as compensatory in nature. Sorry?
Expenses are allowed.
Yeah, now expenses should be allowed. Yes.
I'll skip through the case laws for time. Most important for us, all this technical argument one hand. In the current year, what should we do now? Two main implications for us will be one, for the if you're doing any audit of the pharma companies, then under clause 21A, clause 8, expenditure incurred for any purpose which is an offense and which is prohibited by the law. In case your pharma companies have already expended such expenses in the previous year, and we need to take a representation from the pharma companies asking for such details from them. Again, take a management representation from them that how much expenditure was incurred. And for a doctor and tax auditor who is a doctor, from clause 16A, which amounts to credited, which is about amounts which are not credited to profit and loss account for the freebies. You have to get information from them. Management representation. Now from 1st April, from 1st of July 22, if the freebies are provided, then the TDS will be deducted. So from next year onwards, we'll get to know. If terms of cash, if it's in terms of kind, then yes. Then of course we have to show it as an income. They have given a detailed procedure about how to do that. And then in the hands of doctor, if we know that 194R has been deducted, then we have to show it under 28(4) as business income. Okay. Disallowance under section 14A. This was regarding expenses on which are incurred for earning exempt income. It used to happen that expenses are incurred in 1 year and the income is accrued or received in the next year. So there have been cases, a Supreme Court case has been there in the case of Chettinad Logistics, which says that such expenses should be allowed. So this actually defeats the purpose of the provision, which says that these expenses which were incurred for those income, just because the income came in the next year, you cannot disallow that. It's wrong. So this amendment has come up. There is a amendment in section 79A in which the set-off of losses for search and survey cases for undisclosed income cannot be taken. Major amendments for charitable trusts this year. What has happened? What used to happen is that the double relief used to be claimed by the charitable trusts or organizations. Corpus funds or loans which were taken by the institutions anyway was not used to be credited to P&L account, but the money that they used to get, they used to put it in as application of income and used to claim as expenses against the voluntary contributions they have received. Now what they have said is that if you have received a corpus donation, or you have received, or you have taken any loans, then only in case where you repay the loans and the amount of loans you repay during the year, or the amount of corpus donation that you replenish or you save under section 11(5), only that much will be taken as application of income. I don't know why this has come in, but set off and carry forward of losses has been disallowed. You cannot take carry forward in the next year. Section 23C, there are cases in this regard. For example, one person used to have 6-7 universities, and the threshold limit for each university was 111 CR. So they have said that for one legal person, all the universities will be considered. The threshold has been also increased from 1 crore to 5 crores. Okay. Donations for renovations, it's okay, will be considered as corpus donations.
For charitable institutes, major amendment, it's that only in case of payment in cash, on cash basis, will the application of income will be considered. Some other key amendments which were there in financial year 21, very basic, most of us were applicable for us. So I'm not discussing them in detail. I'm going to updated returns. I don't know if updated returns was considered or you want to be. Okay. This year they came up with an concept known as updated returns, in which if you have an additional source of income to be disclosed for this year, for any of the previous years, not any, 2 of the previous years, then you can disclose them by way of updated returns. So various terms and conditions have been given with that. Who are the people who cannot file an updated return? First one is if you are going to file an updated return, which is a loss return, then you cannot file that return. If it decreases your total tax liability, you cannot file an updated return, or if it increases your refund. Basically, only if you have some additional tax liability, then you can go for an updated return. Sorry? No, I did not get your point. Okay. Yes, correct. So this return can be filed by you even if you had filed a previous return or not filed a previous return. Even then you can file it. Yes. Only for 2 years. Yes. From AY 2021, 2021 and 21-22 can be filed. Yes. Yes, I'll be coming to that. So who are the people who cannot file it? If a search or survey was initiated by your client, then as per the finance bill which originally had come up, it had said that if search was initiated or a survey was conducted, then 2 preceding previous years, you cannot file an updated return. Now, they have come up with an amendment in the Final Finance Act. It says that for any of the years, if your client ever had a search or survey in that case, then for any of the years, you cannot file an updated returns. In future also. Lifetime. That's what they are saying. Yeah, I can't trust you anymore. So in case the assessing officer has received information in respect of person, over here they say relevant assessment year. For example, for that relevant assessment year, you have received some information under the Smugglers Act or the Prohibition of Benami Property Transaction Acts. And the assessing officer has also received this information. For that year, you cannot file an updated returns. What will be the tax payable as per the updated return? Section 140B says so. Very simple. It says that in case you had filed an original return, whatever additional income you are going to take, check what is the additional tax. If there are any additional deductions you want to take, such as you have paid more tax, or there is some TDS or TCS, or there is some MAT credit, or there is some foreign tax credit, on that additional income, you claim that, and there will be some additional tax amount which will be payable by you. In case of if the original return itself is not filed, then whatever the additional income is, you take the debits, you take the credits of the deductions, and then you will get some payable amount. On that payable amount, you have to pay 25% or 50% more tax. Now, this is where this is a bit of unfair, wherein 50% of tax goes to almost like, if you take 25% plus 50% on that, it goes to the range of somewhere around 50-55%, almost 60% if you take cess and surcharge as well. So this becomes very unfair to the assessee that we are coming forward paying the tax as well, but then we have to pay almost 60% of the tax. Further, the department has not said that there will be any protection for the assessee from any prosecution or any notices That might be a case that you file an updated return, and if the time limits are still there, then you might get a 147 as well. So it's not going to give you an immunity. They are just saying if you want to do it, you do it. Like that. But for paying off when you pay this, at least they have not said that you need to pay 270A. When you disclose uh, the income under an updated return, at least they are saying that you don't need to pay an penalty. So that is one thing is there. Yes. Yes. Yes.
Like a normal return.
It's not really a normal return. I'll give you some differentiating points. I have seen the PDF file of it. It's just a 2 or 3 pager file which says shows the additional income, what are the additional taxes, what you have paid, etc. That's it. Many of them were saying that we, for example, assets and liabilities रहेंगे. Can we file and just show an 100 rupees extra return and then we file an updated return? No, we can't do that. Many of the people are saying, okay, original return we failed to file. Abhi bank se loan lena hai. Now you show it. And the loan and the amount is our income is coming under that income which is below the taxable range. It's below 5 lakh only, or let's say it's 4 lakh. Or because of all the deductions, the tax liability is 0. The section says that the loss should not reduce, or the income should not reduce, or the refund should not increase. I won't say that you can claim a refund, but in a situation where there is no tax payable on because of the tax lab, then what? Sorry? No. That's one. It's refund nahi dega, extra tax dega. So in this situation also, okay, this
Return file.
sorry,
Return you can file.
you can file the return, yes.
They will not give refund.
No. It's unfair. See, I'll give you a provision over here. Isme, what do they say? If you go for updated returns, what are you saved from? You are saved from penalty, 270, 50%. However, you might say in many of your client, a client may say, chalo updated return karte hai, you are contemplating that. And suddenly 143.2 comes in. Now, 143.2, if there is any case or if there is any assessment pending for that year, then also you can't file an updated return. So it might get a scenario where now abhi 143.2 aa gaya hai. Now what to do? Then a simple solution to that would be go through the entire assessment properly, disclose the income to them, pay the additional tax. Anyway, you are going to pay the additional tax, not the additional tax, the tax additional which you have to pay on the additional income, not the 25 and 50% under 143.3. You pay the additional tax, pay the additional interest, and then you go for an immunity under section 270 AA. Yes. We have to make an application to the assessing officer asking him if we have to give them a bond saying that we are not going to go into appeals. We have to pay the amount before 30 days of file of the notice. And there are some conditions. If you satisfy those conditions, the assessing officer has an option to accept it. Yes. So again, means even if the assessment proceedings have started and you know about this income, then also there is a protection in the law itself against the immunity. And what happens if you go from the assessment route, you actually save this 25% or 50% of additional.
That is once in a lifetime.
Sorry. Yes, this immunity. That means you cannot like keep doing it.
You were saying something, if taxes income is below tax.
As per my opinion, yes, because nothing, there is no condition which forbids him to do so. Income is not reducing. Income was 0. Now it's somewhere around 2 lakhs.
But the system will accept the return.
It's a question.
पैसा ही नहीं आ रहा है. System only know the term money.
That is, you have to check. Yes. Okay. Initiation of proceedings, assessment proceedings. Okay. Issues in ITR we have covered. So if quickly run through the slides. I have many of the points I did not cover because they were not that important, but you can go through my slide deck. If you have any queries, you have my contact number, and if anyone has queries now, we can discuss them. Yes.
Sometimes when you purchase the property, it 1.5 months, and we certainly buy, we pay installment, not in one time. Suppose the every installment, or he can pay at the last installment.
194I is very clear about this on payments.
On payment each installment.
On
But
each installment.
1 month time is given,
Yeah.
so he can pay at the end of 1 month, and that is
Pay one time in the sense TDS
yeah, second month he pays all
for all the
installments.
For all the it's
time
not required. It's not required to be paid because the provision is very clear that only on the payment there will be TDS liability,
Yeah,
not on accrual.
He is making payment to installment.
Correct.
So
Actually, the builder would also not accept it. He would also ask you to change it because then the complete income will be shown in 1 year. But actually, he is going to charge the income maybe in like percentage of the completion method.
no, it is not a builder case, means individual to
Individual. Okay.
individual.
Okay.
Yeah.
Okay. Resale transaction. Okay. Okay.
So he has complied, but he
That's okay. Means there should not be any default from TDS and that you have paid it in advance. There should not be any default.
advance for the last,
Yeah.
but he is receiving the notice from TDS
What?
that he paid.
Date?
Means
Sorry.
it is system generated.
अच्छा डेट लिखने में गलती हुआ.
Okay, so the correction can be filed.
Correction I don't know. I have never filed a correction. नहीं
It
आएगा.
also happens when you file it.
This is different ना. 16B हम लोग अलग से 26QB करते
Yeah,
हैं.
to be होता है, yes.
Yes, yes. A correction to a 26QB, I have never checked it actually whether we can do it.
Opposite party.
अच्छा, opposite party can do it. Okay. I don't know, sir. Maybe tax office. अच्छा.
You have to satisfy now.
Yes.
Anyone else? If has any queries, we can wrap up the session then. Within 7 days, you can change it. Assess. Bank, if you make an application to the bank, bank has power till 7 days only. If 7 days must have been passed. Bank has the power actually. नहीं होता है because bank has that thing, they can change for at least 7 days. You go to the assessing officer or else. No. Within the 7 days only you try to go. Because first 7 days the challan can be rectified. It's what was communicated to us also by the assessing officer, by the bank. And then if it is not done before that, then you have to make an application with the assessing officer. It goes to Delhi. And it takes quite a lot of time for the rectification.
After 7 days, after some months also I wanted it, but I had to approach the
Yeah, income tax officer you approach now, then he does it on his system that it goes to Delhi. You have to make an application there, and then it gets approved from there, and the gets reflected in your system. Sorry. Exactly, it happens.
They don't consider. Assessing officer ना हम लोग के time. Yes, actually the bank it can be done by the bank because it was communicated to us specifically कि bank कर सकता है within but 7 days. Just claim the amount in income tax return for 31st. Correct. We just first we need to claim and then you will get 143(1). And till that time, if the challan is rectified till the processing, then we just again reprocess the return with the TDS with the challan credit. Maybe if the bank is not accepting now, the only thing is to go with the assessing officer, and that will take some time, 2.5 months. Because they are also like कि करेंगे बैंक नहीं करेगा, असेसिंग ऑफिसर करके देगा हमको, बिकॉज फिर इनकम टैक्स रिटर्न फाइल करने के बाद यू कैन टेक द इनकम टैक्स रिटर्न कि यही साल का है, मिस्टेकली भर दिया था, मेक एन एप्लीकेशन टू देम, दे डू इट. So maybe you can file an updated return. Updated returns can be filed from AY 2021. Yes, sir. 37 freebies. Yes, it's freebies. Yes, no, I think so. They have 1 minute. They have over here also. They have said that it has been clarified. 1 minute. No, it says it's prospective. So with effect from AY 2020.
See what actually in all these centers, no, like the city.
सब कुछ, all those ways can be found out, but if I don't think so, the income tax department are concerned with small people. They are like, I'll give you an example. I was checking on this, and I was doing some research for one of my clients. If you see now, the doctor told me this. It cannot be an offense for us for all the amount. For example, this offense within, if you give pharma companies as per the medical council only, if you give a gift up till 1,000 rupees, that is okay. 1,000 to 5,000 rupees, there is some, they are given some notices given to them, and if you get more than 5,000, then there is a suspension for 3 months. But now let's say a huge pharmaceutical company is giving to lakhs of doctors less than 1,000 rupees. So now that will again run into crores. That is cumulative 1,000 rupees plus. Now, for example, some pharma companies are giving as just a social courtesy to Diwali gifts, because this discussion happened with one of the doctor. He said कि अरे फार्मा कंपनी से ऐसे भी आता है, मतलब दिवाली के टाइम सबका मिठाई आता है. Just because you get one मिठाई box doesn't mean that अभी हाँ you recommend that company. But then see, this provision does not cover all those things. These are all practical things which I am discussing because I discussed this with a doctor, and now this thing also can run into crores. But now you can say one thing, that the 194R is only till 20,000. 194R benefits excessive of 20,000 TDS. Now for such a genuine situation in which you are giving something for Diwali or some on a social occasion, or they get something on their birthdays normally, the doctors from the company. And these are very small, just some token or something.
The exercise of the profession, no?
Sorry.
That whatever receipt they are getting in the birthdays, that is the exercise of profession, because that gift is given to them through to the doctor.
But then anyone can argue that just because you give me a 500 rupee gift doesn't mean that I'm going to suggest your medicine, right? Huh. But see, whether it is taxable in the hands of the doctor is a different matter. Right? Okay, you get that gift 500. Then 28(4) mandates it to be disclosed. It won't go under 56(2)(10) under the 50,000 bracket. It's just because, as you said, it's because of your business and profession. It will be taxed under your business. Yes. And as sir said that you are going to pay tax on it. But still, just because it is against, it's an against the law and deemed to be an offense.
Doctors, what they do, they shouldn't get
Again, this is a point, means this has to be argued on fact to fact basis. What they have just done is just and wholesome, they have just put in a, now this provision specifically came for the doctors, but then because of this provision it has huge implications. They are saying foreign laws. I mean, foreign laws कौन पढ़ने जा रहा है? And कौन सा foreign law, कौन सा इधर ये हो रहा है? Tomorrow anyone can say नहीं, as per Sharia Act in Dubai, this provision, this expense is this allowed. Then how many you're going to put in explanation that this act is not covered, this act is not covered? Are you trying to enforce foreign acts also in this?
Formal business also.
Yes. Medicine and
Dealer
supplement.
and distributor are getting the various gifts
Yeah.
from manufacturing.
Yes, everyone. But those gifts are not disallowed by the law. It's kind of a commission. Okay, ठीक है, yeah, but it's disallowed under law for medical professionals. Legally, they are okay.
TDS could be applicable.
TDS will be applicable, yes. But then it will start now. This would be the first year in which now we will get to know how much he's actually getting. What?
Foreign trade.
Freebies, foreign trades. Means in the Supreme Court judgment also apex, they have written for freebies, foreign trips, fridge, LCD TV, LED TVs, motor car, lot of things they have written. So all these things we mean to apply to all these things. Okay, thank you so much. Thank you.
Thank you, Aditya ji, for the wonderful session. Now, for the formal vote of thanks, I would like to call upon CA Manisha Mange.
Hello. I, on behalf of JB Nagar Study Circle, would extend a very hearty thanks to CA Aditya Pradhan for sharing us the views, your findings and opinions. The session was great on recent changes in direct tax laws and issues in ITR. Like you were discussing very minute to minute technical difficulties which we face generally while filing the ITR. Like we would have faced like our staff coming up ki ma'am OTP nahi aa raha hai. That is a very small issue, but that is also very important part to update the mobile numbers and email IDs, and also the update related to updated returns. It was like great detailed discussions, and thank you. I would like to thank you all the members also for great participation. It was like both the sessions were very interactive sessions. I would like to thank all the members for active participation, and both the speakers were awesome. And thank you for thank you, JB.